What's going on, everybody? Joshua Salvetti. Welcome to another lesson from the High Performance Trader. So today I want to break down, you guys always hear me talking about identify and adapt to market conditions, right? So in this video, in this lesson, I want to break down what it is exactly I'm talking about when I say those two words, identify and adapt, right? Because this market is constantly throwing information at us, right? And it's so important to be able to understand and identify and look and perceive the correct information, right? Because sometimes, and this happened to me, I speak on experience, I used to jump into the market each and every single day and try so hard to make money, but I was going about it all wrong because I wasn't truly understanding what the market's telling me, right? So I break this down in my course that's very valuable, but I break down how to read and understand the market's language, right? So the market communicates to us through candlesticks, right? Candlestick analysis, chart patterns. These represent human behavior, right? So what makes up a market, right? So let's start at the fundamental component. So the market's made up of buying and selling, right? So we can agree that the only two ways to make money in the market is to buy low and sell high, right? So there's some other ways as far as like options trading, like straddles and whatnot, but we're not going to get into that. At the very base, right, there's only two ways to make money: buy low, sell high, right? So for us to do that, we have to understand that what goes into a trade is two people, right, with two different beliefs, right? The first one's a buyer. He's buying because he believes price is going to increase, right? And then there's a seller. He's selling because he thinks price is going to decrease, right? So based on those two components, we get price action, right? So what price action is a bunch of buyers, a bunch of sellers consistently going at it, battling over critical levels, right? So in my lessons, in my courses, in my Discord, everything, I talk about these critical levels because the way I use them is to understand the conditions of the market, right? So let's bring it back once again. To make money in the market, we must buy low or sell high, right? So for us to understand that concept, we must have an idea of where markets and where price is going to head, right? We don't buy low and expect the market to go lower, right? We don't sell high and expect the market to keep rising, right? So for us to identify a profitable opportunity, we must have a general understanding of where price is headed, or at least a higher probability hypothesis, right? So once again, the two traders, right, that make up the market, right, which make up the trade, one believes price is going to go up, one believes the price is going to go down, right? So we cannot move the market, right? Us retail traders, we're not banks, we're not institutions, we don't have trillions and trillions of dollars. We can't manipulate price. So we must learn to understand and identify what price is telling us, right? And we do this through candlestick analysis. We do this through supply and demand. We do this through critical levels. That's why I truly believe price and volume analysis is the only way to go, right? Because it is the one way to analyze the market, right, in the live moment. So another thing I got to say, right, we understand that the auction is made up of two traders. We understand that we must buy low, we must sell high, right? Another thing that you need to become consistently profitable in the market, right, is to be able to understand exactly, right, when to react to specific price action, right? So a lot of traders think to become consistent, they have to learn to predict, right? I must learn, a consistently profitable trader can predict the market. They can understand which way it's headed, and this is how they make money. No, false. A consistently profitable trader understands that he is going to sit idle until price reaches a critical level, and based on price action in that critical level, he then reacts to that information that he's perceiving and then puts on a higher probability trade. So the purpose of this lesson is to help you identify those high probability setups based on market analysis, right? So the way I do this is I first identify what I like to call areas of value. So areas of value are areas on a chart where previously buyers or sellers defended them, right? We can call the highest price that you can see an area of value. And what's really cool about this, guys, is it doesn't matter the time frame. You could do this on the weekly time frame, you could do this on the monthly time frame, you could do this on the daily time frame, 4 hour, 1 hour. It does not matter, right? So for the purpose of this lesson, we're just going to use the 1 hour, right? So identifying areas of value, right? We do that by identifying price patterns, right, where price reacted in previously. So the first areas of value I'm going to identify is the bottom and high, which I like to call supply and demand, right? So the bottom is demand. Now, demand is an area of value where we're looking for buyers to show back up in, right? And the reason why is because previously they showed up there. Remember, we're trying to identify large money stepping into the auction, into the equation, right? We can't move the market. So we must trade with smart money, right? So we call this demand because the demand for shares is way higher than the supply, right? So think of an auction when it's going 1,000. Can I get 2,000? Can I get 3,000? Can I get 4,000? Sold to the guy in the back, right? So think about that. You got one commodity, right? And someone that wants to keep buying it. He's bidding the price higher, right? He'll pay 100, he'll pay 200, he'll pay 300, he'll pay 1,000. This is how the market continues to rise, right? Because there's only so many shares. So when there's more buyers than there is currently sellers, price goes up, right? Remember, 2 traders go into each and every single trade, right? So when there's way more buyers than there is sellers, there's only so many shares. So this increases the demand for the commodity, right? So demand is areas we're looking for buyers to show back up in. Supply is where we're looking for sellers to show back up in, right? So the way I do it is I draw rectangles and then I make them red and I make them green, right? So we got supply up here because this is where sellers showed up before. A couple other areas that we had supply were here, and then we got supply over here, right? And once again, these are areas where buyers took price into, but there was more sellers increasing the supply for the commodity, right? But once price breaks out of that supply zone is then invalidated, and now that price is going to act as demand, right? This is a really good example right here, where this was previous supply, and now it is demand, which this is where there was a lot of sellers, and then look, price came right back into it, buyers showed up, right? And I break down the psychological aspect to the break and retest in a different lesson. Okay, so that's how you identify supply, that's how you identify demand. If you want more information, you want to study a little more extensively on that concept, click the link below. Trader Bootcamp will break you down on how to draw, understand, identify supply and demand, and the psychological aspect behind it, right? Go a little deeper than I just did. Okay, so next, critical levels, right? Now, once again, we need to identify who's in control of the market currently to get in and out of profitable trades, right? So we do that through critical levels and candlestick analysis. So this is the 1 hour. Let's jump into the 15-minute, right? So here's that break and retest we were just talking about. And once again, you can see it was supply, broke, now come back down, and now it's acting as demand, right? So this is what I like to call a critical level. Why is it critical? Because if and when price comes back to this area of value, right? So say price comes back down to 45154 on Monday morning, I'm looking for buyers to show up. I'm not assuming and I'm not predicting they are. I'm not getting in a trade based only on that information, right? I'm waiting patiently, sitting on my hands until those buyers show up, and then I'll identify a nice entry, right? But the reason why this area is critical is because if buyers do not show up, I'm expecting a sell-off all the way down to this 448 demand zone, right? So I hope you guys understand that. Once again, this is a critical level. The reason it's critical is because whatever happens here is going to help us understand the conditions of the market. And the better understanding we have of the conditions of the market, the more money we're going to be able to consistently make as a trader, right? So once again, We have 45154. We call this demand. You can call it area value. You can call it critical level. Whatever you want, does not matter. What's important is that you understand that is very important, and whoever defends this is going to paint a picture for the rest of the day, right? So that's how you identify a critical level. There's also a couple other critical levels, right? Another one is end of day, right? This is whatever the price ended at, right? Which you could always find right up here, 45218, right? The way I do it is I will just make a price level, come over here, put 45218, and then I will label this end of day, right? End of day, boom. And then I'll usually make these a different color, right? Because our brains like colors. Everything can't be the same color because you'll get confused. Okay, so there you go. That's another critical level. Now, there's a lot of other important areas that need to be identified, right? So there's end of day, there's demand, right? We got previous day high, which is the highest point from the previous day, right? And then we got previous day low, which happened to be end of day, so I'm not going to write it again. And now, once again, the reason I have these labeled is now I'm looking to see what happens in these levels, right? The only reason I identify these levels is so I can see what price action does in these levels and then trade accordingly, right? So for the second half of this lesson, we are now going to break into what sort of candlestick analysis I'm looking for within these levels, right? So I have a very good example right here. Let's get rid of this supply zone and let's just see. So we have end of day right here. And now this is going back to 7/19/2023 for anybody that's looking on their chart. Okay, so we have end of day right here and we have previous day high, right? Now remember what I said, when previous day high gets defended, right? When previous day high gets defended, you now switch that from supply to demand, right? We've broken it. Now we're looking for a retest, and then we're looking for a candlestick, some sort of chart pattern within this area to then take the market long, right? So what is the market telling us here, right? And I'll tell you. So you have previous day high, right? You have price rallies above it, comes down, retest, right? Now check this out. I love this candle because this candle, this is where the market's language comes into play, right? So the market communicates to us through candlestick analysis, right? And now once we've identified these critical levels, our next move is to identify what the candles are telling us within these levels to then make profitable opportunities, profitable trades, right? So let me see. I actually let me make. I got a little better example for you right over here. Okay, so this day right here, right? We had this massive rally, right? So let's just chart this out real quick. So we have previous day low, right? Which is a demand zone because buyers showed up. The reason why it's the lowest price is because buyers showed up there, right? Buyers showed up, causing price to rise, increasing the demand there. So what we're doing is looking for that same buyer to defend that area. If the buyer defends that area is still validated, painting the picture for bullish market conditions in this scenario, right? Next, you have end of day. Now, end of day was right here, right? The last price. Let me label it. End of day. Guys, got to make it fun, right? Okay, so we have end of day there, and now we get a couple more areas on the chart. But that's really all that we need there. Now, once again, what I'm doing here is I'm going to identify these levels because now these are my targets, right? Because the market's really funny. When it acts when previous price action, right? All this selling, this, that, and the third. Every time price sells off at a specific level, you can usually expect price to revisit that level, right? Now, when conditions are bearish, right? No doubt. But once conditions are bullish, you can expect these levels to match up. And the reason that is because there is massive amounts of orders and volume in these levels. And now where there's a lot of volume, there's going to be a lot of movement. And where there's a lot of movement, right, this is what we call the market imbalance, right? Now, these levels are like magnets, right? They gravitate towards each other because you got a seller right here, right? He's trying to sell 10 million shares, we'll just say, right? So let's just say he offloads 5 million. He can't sell all 10 million because there's not 10 million buyers currently, right? So he offloads 5 million because there's only 5 million other buyers that can match the other end of his trade, right? So since he's selling so large, this increases the supply, right? So price then goes lower, 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 but he still has that limit order for 5 million shares there, right? So for him to sell that, price needs to revisit there, right? So once price comes down, plays around here, defends end of day, and starts to rally, it's going to go back up to where he was trying to get rid. The market's going to fill that $5 million order. It's just how it works. It doesn't happen all the time, but that is the idea of the market, right? There's a $5 million order up here, right? Price gravitates up to it, and then it's going to fill it. And based on how many buyers are there, price is going to rip through it, right? Or price is going to reject. That's where you get these double tops, right? Like this is a double top right here. This was a supply zone, right? Now price rallied into it. And let's just, for that example I was just saying, say he was trying to sell 10 million shares here, but he could only sell 5 million. Once price revisited it, he got rid of those 5 million again. You could see price sold off. But then there was, let's just say 8 million buyers right here, causing price to rally through it, right? So what I'm doing here is looking at a chart, but since I understand the market auction, I can paint a picture of who's in control of the market. This gives me a massive edge. This is why I recommend to everybody on my team, everybody in the world, that you read the book, A Disciplined Trader. Okay, I literally keep it right here. This book right here by Mark Douglas will change your life. It breaks down the auction aspect of the market, and to become consistent, you must understand that, right? So, Disciplined Trader, Mark Douglas, get the book, right? So, let's just break down how we traded this. So this is what it looked like pre-market, right? Price rallies above end of day. Now, for everybody that knows, this is a chart pattern. Does anyone know what sort of chart pattern this is? That's right, it's a bull flag, right? So you got a critical level, which is end of day, and now you got a bull flag, right, defending it. So what the bull flag is telling you, bull flag's a bullish chart pattern, right? I don't understand completely how and why it's shaped like a flag, but all that I know is when you get a rally and then a consolidation, right? That's a bull flag. Now, the consolidation must be within 50% from the high, right? This is when we whip out the Fibonacci retracement. And you can see we are consolidating way above 50%. And another thing I look for, right, is the wicks, right? So if we whip out the 2-minute chart, right? Let me whip out 2-minute. Now the 2-minute works great to identify buyers or sellers defending critical levels, right? So you get this right here. So now notice every time price comes into end of day, we're getting a lot of wicks. Now, what the wicks are telling you is that at one point, this candle was completely red, right? This candle came all the way down. It was completely red, but buyers kept buying, right? There was a large order of buyers right there. We don't know the logistics of it. All we know is buyers are trying to defend this area. Look at the volume, right? Price and volume analysis, right? Once again, volume's picking up heavy, abnormal volume in an area of value is usually telling you smart money is entering the market. So we start consolidating, right? Right around VWAP, which if you want to learn about VWAP, check out. I got another video down below. But VWAP, volume weighted average price, right? I want to see buyers defend this to remain bullish. Price breaks out. Boom. Okay, breaks out of the bull flag. Clear indication that buyers are doing their thing. And now we are rallying into a supply zone, right? So once again, remember my example earlier. A supply zone is nothing other than a large sell order, right? There was 10 million shares trying to be sold right here. Once again, 5 got filled, right? Now that other 5 is going to start unleashing at this area again, right? Remember, so we have 450.19. some bigwig, right? Some billionaire wants to sell 10 million shares here. Once again, there's only 5 million traders taking the other end of his trade. Remember, two components, two traders, one buyer, one seller. One thinks price is going to go up. One thinks price is going to go down. This guy clearly has the capital to make it go down. He has the influence. So he's unleashing 5 million shares. Other people are buy. Price is dropping. And then, whether or not they're getting stomped out, who knows? But price continues to rally down. But next time price revisits this, he still has 5 million lot on the table that he wants to get rid of. That's why price rallies into this area and then sells. But once that massive order, that $5 million order is gone, you then see this. You see volume peak way up, and it's all buying volume, right? Once again, this is a critical level. We are not the only ones that can identify buyers taking control here. This is why you get all this volume, because other traders are going, hey, this is an area that's about to break, and when it breaks, I want to be on the right side of this trade, and I want to take the market to the next supply zone, which in this case was 450.71. And for any experienced trader, they can understand this and go, hey, I'm not making a trade all day until I know who's in control of the market. And once this supply zone breaks, in the way it breaks, I'm going to be looking for a higher probability trade to the upside, right? So you want volume on your side. You don't want to be making trades where there's low volume. That means other people aren't interested, and you could be entering in, bull, bear traps, whatever it may be. You want to enter in the trades where people are getting stomped out. That's another reason why there's a lot of volume. All the people that went short here are now stomping out of their trade. And buyers are capitalizing on the critical level, right? We call this critical point analysis for all my physics people out there. So this is an area that had force, selling pressure. Buyers overcame it. Price rallies. Next supply zone, right? We get a little bit more selling, right? Once again, another guy unleashing shares. But there's way more buyers than sellers here, right? And then we get this break and retest off this previous supply zone, right? And then once again, volume peaks up, and then we retest this supply zone. So you see what I'm doing here? What I'm doing is painting a picture. I understand the market auction. I understand buyers and sellers battling over a price. And I also understand how to control my behavior. So I have all this that makes up my edge. I'm patient, I'm disciplined, and I have the knowledge it takes to identify critical levels and see who's in control of the market. Does this mean I get faked out sometimes? Absolutely. Trading is not 100%, but our ability to identify these conditions and adapt to them, like I said earlier, is going to help you take the correct trades. It's going to help you trade with big money. You are going to become much more consistent given the fact you can demonstrate proper risk reward, right? But you want to be able to identify and adapt to market conditions, right? So once again, price rallies right into supply. We're getting our wicks. What do our wicks tell us? That sellers are stronger here. And then price comes down, retest this critical level, which used to be supply. Once again, guys, now it's demand, right? So now we're looking for buyers to show back up. Now, if buyers don't show back up, right? So say price falls below this old supply zone, which is now demand. That's telling us that conditions are switching bearish, okay? Right? So you see what I'm going here. Not once do I predict anything. All I'm doing is identifying critical levels, and based on what happens in these levels, I then make trades accordingly. So then price rallies. Here's another perfect example. So once again, you have supply, right? This was supply because we had a large seller previous day, right? Let me just show you again. What's this at? 450.71, right? Look at this massive seller here at 450.71, right? Made price drop about $5, $4. So now that price is revisiting this level. Look how many times it rallies into it. Once, twice, another time. Look at right here. Look at the volume right here. Huge. This is probably where the rest of it, he probably had like 2 million right here. Actually, I'll tell you exactly how many. In 2 minutes, someone sold 600,000 shares. Or, my bad, 600,000 shares got sold, and it looks about 75%. So we'll call that around 450,000 shares got sold right here. We'll say 150,000 shares only were bought in, right? Massive sell bar. but buyers continued to prevail, right? So once his massive order of selling was done, price breaks through it and rallies, right? So now this was supply, right? We're going to make this red. And now it's demand, right? And the reason why this happens, right? I'm not going to dive too deep into it because it takes a while. But you have all these sellers here that made money at 450.70, right? These guys made money. These guys made money. So they re-entered right here. And now they're down 10%, 20%, 50, 30%, right? They want to get out of their trade, right? But they wait for price to come back down to this level. This is where they stop out of their trade, break even, thankfully, right? Because we all know anyone that's traded before, when you're in a losing trade, to get out where you got in is a very good thing. Breaking even is a form of consistency. So this is what fuels when sellers stomp out of their positions. They're actually liquidating their positions by buying the shares, right? Because short sellers borrow the shares and then buy them back for a lower price. But in the event they pick the wrong direction, they're now buying back at, at the same price they got in. But this is fueling the buying. Once again, look at the volume. So this is why it's so important, once again, to be able to identify market conditions and adapt to them, right? I could go much longer, guys. I don't want to take too much of your time. I hope you enjoyed this video. Make sure to hit a like, subscribe for more content, right? And if you want more content like this, right, hit a like, comment below, but most of all, check out the links below in my bio. Get involved in Trader Bootcamp. I break down all the psychological aspect of this. I break down candlestick chart patterns, everything you need, right? So get involved, ladies and gentlemen. I will see you there.